Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the day straight. Also a wrap-up of how the day really panned out in trade in terms of the benchmark index moves, the broader markets, the sectoral action, as well as the stocks that have been buzzing throughout the trading session as well. Also, we'll help you with the expert views on what to expect from the markets from here on and the strategies that you as investors should be adopting in this current market, which is a very, very volatile market. But first up, a quick check on how the benchmark indices are trading as we approach the last half an hour of trade. Now, when we look at the Nifty and the Sensex still hovering lower in trade below the flat line, amid slight volatility, but a very, very narrow range is what you've been able to spot. 17,826 for the Nifty. The Sensex hovering 20 points lower at 60,676. Also in the broader market space, the mid and the small cap action does suggest to you, again, a very flattish and a lackluster move that you have been able to spot. About a 0.25% loss for both the mid cap and the small cap 100 indices. The India VIX has now shot up 5% nearly at 14.05. So that's the level that you need to watch out for, because this is the expiry week and we will be able to see some more volatile moves. And then in case that happens, what should be the strategy that you follow? In terms of the sectoral moves, there are only two sectors that are still holding up into the green. And one of them is FMCG, the other one is financial services, which is just flat with a positive bias in trade today. Rest all the sectors are down in trade, led by the pressure being felt in the PSU banking space. That's down by 1.6%, over a percent decline for the Realty pack. Metals are declining 0.25% odd. IT stocks are in fact seeing profits being taken off the table, 0.8% of a fall for that one as well. The market breadth skewed towards the declines, 31 declines to 19 advances today, with a major pressure being felt on some of the Adani Group stocks as well today, like Adani Enterprises as the top loser on the Nifty index, about 2.8% lower in trade. Apollo Hospitals is down by 2.3%. Bajaj Auto is seeing some declines. Coal India and HDFC Life down in trade as well. On the other hand, the power stocks are up in the green. NTPC, Power Grid up in the green. Reliance Industries is hovering higher at 24.35. Tata Steel, Britannia, the other gainers at this point in time. Time now to welcome our guest for the day. Ruchit Jain joins in. He's the lead research analyst at 5paisa. Welcome, Ruchit, and thank you so much for taking the time out for this discussion. Well, the markets have been pretty dull and very, in a consolidating zone right now. What are you really doing in this current market, and what are you advising investors to do?
Hi, very good afternoon, Sakshi. I think that markets have already seen some good price-wise correction in the last couple of months, where the index registered a high of around 18,880 during the start of December. But this entire December and January series went through some price-wise correction, and I think ahead of the budget, just around the budget, when we had very negative sentiments overall due to the volatility or uncertainty around the budget of the Adani Group stocks, news flows which was there. I think we have already formed a price-wise bottom around that 17,300, 17,400 range. So we are of the opinion that price-wise corrective phase may be behind us now. Now we are going through some time-wise correction where markets are consolidating within this range of 17,500 to 18,000, the broad range of 18,200, 250 on the higher side. And after the short consolidation, time-wise consolidation, I think we should see some good price-wise movement going ahead. So we are not much negative on the markets as of now. Yes, maybe some time-wise correction could be there before we start showing some positive traction.
Right, absolutely. Okay. The power stocks are up in the green today. So that's one segment I wanted to take your view on before we go ahead and discover the other sectors and important stocks that you may be keeping on your radar. I mean, power stocks are up after the Power Ministry really invoked this emergency clause in the Electricity Act. It directed all the imported coal-based power plants to operate at full capacity in the upcoming months as the country really braces for higher demand in the summer. There's an indication of early onset of summer already. We are seeing the temperatures soar right there, and I mean that we are seeing stocks like NTPC, Power Grid, Adani Power, Tata Power, even Jindal Steel and Power up in the green today, up by 125 odd percent. Your thoughts on how does one really look at this basket? Does it make sense in the summer months for anyone looking at short to medium term kind of positional trade in some of these stocks? Does it make sense to invest in these?
Absolutely, because we have already seen some good consolidation in some of the names such as Power Grid, NTPC, or even Tata Power, where since the month of October 2020, October 2021, we have not seen any significant price-wise returns. So I think the pain period is behind us now, and we could see some positive traction going ahead. Within the space, if I have to pick one or two, then I think NTPC would be the most preferred one. Looking at the price volume action, today the stock has already given a good breakout above that hurdle of 170. And even if you look at the volume action in some of these names today, then they are quite better than the daily average volumes which we see. So I think that this could be a start of a good trended up move, where NTPC could see levels such as 185 followed by 200 over medium term. So NTPC should be bought even at current levels, and other power stocks too. I think the worst seems to be behind them now.
Okay, understood that as well. But talking about the other sectoral moves, where do you see, technically strong built up on the charts as well as structurally? Do you believe that there is enough after this kind of a volatile or the kind of dips that we have seen in the markets that makes sense for investors to really keep an eye out on some of the pockets or sectors or themes that you may be tracking at this point?
So Sakshi, one of the theme that we are tracking is capital goods sector, because if you
Okay.
really see last 1.5 months, some of the capital good names have witnessed a good outperformance compared to the broader markets. You look at stocks such as Larsen and Toubro, Siemens, ABB, all these names have seen a good price volume up move and have shown an outperformance, during this corrective phase. So usually it happens that whichever sector shows, Cummins would be another name to add to this basket. Whichever sector shows outperformance during corrective phases, those stocks or sectors tend to do well when the market shows a trended move. So capital goods would be one space where one should definitely have a look on. And other would be oil and gas space. We have seen a good correction in some of the oil exploration names of late. To take ONGC, Oil India, even Reliance Industries. No, but now it seems that the prices are forming a support base, and some pullback moves have been witnessed with rising volumes. Oil India has already given good returns in last 1.5 months. ONGC2 is on the verge of a breakout of its previous swing high resistance. It also gives a good dividend yield, of course, around about 6%. Reliance Industries too, after this correction, 2300 has been acting as a good support in the past corrective phases as well. So I think oil and gas will be another space where traders and short to medium term traders should keep an eye on.
Absolutely right over there as well. But I also wanted to take your view on some of the stocks that have been buzzing in trade today as well. So let's start off with some of the stocks that are up. From the FMCG basket, Britannia is up by 1% odd as well. This space has been showing some kind of bounce over the last few trading sessions. Does it make sense for investors to really look at this pack from large cap or the mid cap basket? Anything that interests you from the FMCG space?
I think I would say if existing positions that are there, those who are bought at lower levels in Britannia could be held on, because the broader trend has been positive, and within the FMCG basket too, this stock has done well in last couple of months. But the risk reward issue is now is not much favorable for fresh buys. If we get any declines towards that 4,300 or 4,200 range, ideally that would be the levels where the risk reward issue would become favorable to take some contra trades. So Britannia would wait for some declines to add on, but yes, existing positions if there are, then they could be held on. Pidilite would be another name where mid to long term investors can look at buying now, because the prices have seen a good corrective phase of late, and the stock is now trading around its mid to long term support level of 2200, 2250. So I think the downside seems to be very limited in Pidilite industry. So this could be another name from the FMCG basket, where if one has to do some kind of bottom fishing or some contra trades, then could
Sure.
be taken over here.
Right. Another defensive pack, IT also what I wanted to discuss with you. Most of the names have lifted off quite a bit from the 52-week lows that we had seen towards the end of the last year as well. Your thoughts on, how should one approach this space? Does it make sense to be looking at these stocks either from the large or the mid cap basket?
So last 1 year, entire 2022, we saw that in spite of the global markets global markets showing some correction, our markets have relatively stood out, and as we had Nifty positive 4% returns. Bank Nifty also, it was not much negative compared to the now compared to what we saw during the global market meltdown. But IT was one of the index which corrected very significantly, and
Sure.
in India too. And the main reason because it has been mirroring the Nasdaq index. When we see a downtrend in the Nasdaq or the global IT names which are underperforming, Nifty IT index too showed that price-wise corrective phase. Now, when the Nasdaq has started resuming its positive momentum, it has witnessed a decent up move recently. And in spite of some short-term volatility, some short-term corrections, the important supports are still intact. I think that's the main reason we are witnessing some catch-up moves in the IT names. Large IT names have already seen a good up move. I think this could spread towards some mid-cap IT names. Today we can see some good momentum in some of the mid-cap IT stocks as well. So overall, until we see again a sharp correction coming in the global markets or in the Nasdaq index, I think our IT space would continue to see some witness of buying interest, and certain mid-cap IT names looks attractive from short-term perspective.
Bilkul, bilkul. That's right. I wanted to understand one more thing from you. Any pockets that you feel that are actually, something that one investor should stay away from at this point in time. What about the Realty pack, for example, that has been continuously trading under pressure? Is this space something that investors should be wary of looking at currently?
So I think Realty has not been performing since the interest rates are on the rise. If you look at the Nifty Realty Index and compare it with the interest rate hikes, then the time from when we had seen the interest rate hikes, the Realty stock started underperforming. So take it Realty, many of the housing finance names also, except HDFC. So look at HDFC Housing Finance, or some of the housing finance names have also underperformed since the interest rate started going up. So until we get signs that the interest rates have peaked out, right? So in the recent monetary policy from the RBI gave hints that inflation may be near to the peak. But again, the January figures of inflation does not give much confidence that we would not see another 25 basis points high. Also, I think if the US keeps keeps raising the interest rates further, I think RBI would also have to take a stance on that. So the moment we get some signs that yes, interest rates have peaked out and now the cycle would reverse, I think that would be the phase when the realty stocks would start forming some kind of bottoming for formations. So until those are not seen, I think realty would be one space where one can avoid if one is looking from a short-term perspective.
Okay. Okay, now I'm going to be asking you for your top picks at this point in time. Which are your top stocks that you're keeping your focus on in this kind of a volatile market?
So as I said, I would go with some of the sectors which have been showing outperformance. So one of them would be Reliance Industries, where a good support base have been formed around this 2300 mark in the around the recent lows. So the downside seems to be quite limited from here on, and any up move from here on in the markets going ahead, I think Reliance would be one of the leader which would lead this market. So a bit, one can buy at current levels and add on to dips towards the 2400, 2380 mark, keeping a stop loss below 2300 and expecting targets around 2600 to 2650 in next couple of months time frame.
All right, understood that too. Well, thank you so much, Ruchit, for being with us on this show and discussing with us all these various pockets and suggesting strategies to all our viewers and investors out there as well. Right now, if we speak, the markets are hovering lower, about 26 points of a cut for the Nifty 50, 43 points lower for the Sensex, and it's a flattish with a negative kind of bias that we're looking at, about 12-13 minutes away from the closing of the day, and it could be the second day in a row this week that we could look at a lower close in this session as well. But we'll keep an eye out on how the market experts are really viewing the opportunities in the current market as well, so that you can constantly get on top of your investments and get to know where exactly can you make higher returns even in this kind of a market. And so for that, you should stick with us on This Is Today TV. Don't forget to subscribe to this channel and also stick with us via our other social media platforms, that's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in onto this one.
The government mentioned that petrol and diesel can be included in GST. How soon can a government come out with a decision on that matter, ma'am?
It's not for the government.